Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Mr. Daniel Yu, global strategist at Yuanta Securities. Mr. Yu, good afternoon. Thank you for making time today.
Good afternoon.
Well, let's start with oil. The spread of the Delta variant is industry anticipating a drop in demand, and so oil prices have come down sharply from last month's peak to under $70 a barrel. Of course, that might not last long, but what do you see happening with oil prices?
Right. If you look at the oil price now, it went down as low as about $66 per barrel. The main reason for that is because of the rising Delta strain cases, and there's possibility of curbs in the China, where the Chinese markets are basically showing some regulatory environment where the economy is slowing down. The PMI numbers are coming in at lower than expected, and overall, people are expecting that the slowdown of the recovery that we've seen in the strong first 6 months of this year. However, though, if you look at the overall the shift in terms of the inventories, it seems that the U.S. crude inventories are at the declining trend, and also economy seems to be continue to be doing resilient recovery. And we are seeing there is a continuation of improvement in terms of the travels and various other economic activities. However, though, yes, there is concern that the daily new virus cases have climbed up to 6-month high in U.S., with more than 100,000 infections reported nationwide, and people are having some doubts about what's happening to the overall economic conditions. In any case, we are not seeing a major increase in supply side yet, and therefore the supply and demand picture seems to be quite tight per se. Therefore, we don't think that oil price is going to plummet. It's just going to be remain at a box range, which we've been saying that continuously. It should be somewhere between $65 to $75 per barrel. We don't think the oil price can rise up to the highest level that we've seen in 2018 level, because of the continuation of the ample supply that we're seeing and the overall changes that we're seeing from the oil-based energy sources to a renewable energy sources. That seems to be having quite a big impact with the climate changes that we're seeing in global scale.
Right, and in the stock market in New York overnight, it closed lower. It seems that too linked to the Delta variant. Also eyes on what the Fed is going to do in view of that strong jobs report. What's the story in the global markets?
Right, on Monday, Dow fell about 107 points, or 0.3%, but still remain at 35,000, well above. And S&P 500 declined very slightly by 0.1% and remains well above 4,400 levels. And also, if you look at NASDAQ, it was up by about 0.2%. It's at 14,860. Clearly, the Delta variant strain is causing cases for concern. However, though, we are seeing continuation of economy recovering. And if you look at the earnings numbers, it's coming in, now close to 90% of the earnings numbers that came in. And it all shows that the 87.6% beating the analyst estimations. And also there's news about the $1 trillion infrastructure bills that is expected to come to close. And if that's the case, then economic recovery should be in a right track. However, though, there is a concern about the tapering possibilities. Monetary stimulus that we've seen in so far is going to be probably scaling down as the inflation numbers are coming in strongly, with the labor market seems to be recovering quite nicely. If you look at the new job added, 943,000 added in July, versus the expectation of 870,000, so well above. And unemployment ratio fell to 5.4% from 5.9%. And if this kind of trend continues, then full employment is expected within this year. If that's the case, then the Fed's tapering might be happening faster than expected, and that's the reason why people are concerned about the liquidity condition in the market. But however, though, if the economy is recovering in the right track, the earnings should be sustainable, and therefore the U.S. market might be taking some breather, but the trend should be continued to be in a rising trend.
Right, in Korean stocks today, down a fair bit too. Many of the same issues, but a notable decline in bank stocks led by shares of Kakaobank. Very strong retail buying today. Tell us about the domestic market.
Right. If you look at the Kospi, it was down 0.5% plus, and Kosdaq was down 0.75%. I think that Korea is reacting much more keenly to what's happening to the possible tapering issues and the global economic slowdown, because Korea, number one, is highly linked to global economic recovery because export focused is important, and also Korea is highly sensitive to what happens to the U.S. dollars and U.S. interest rate. So those are the concerns that are affecting the Kospi and the Korean market. On top of that, the current condition of a lot of the IPOs that are happening, we have seen quite significant size of IPO from Kakaobank to the Krafton listing, and this kind of new listing would absorb the liquidity conditions that we've seen in the market, and that affects negatively for the overall market trend. So I think that currently all these new IPOs, second quarter we're looking at 27 new IPOs, first quarter was 32 new IPOs, and all these are absorbing quite a bit of ample liquidity that we're seeing in the market. However, though, the fundamentals of the current existing listed companies are looking very good with a strong earnings momentum. And if that's the case, we think that the market should show rising trend towards the end of this year. For the short term, because of the liquidity conditions and because of these some issues with the tapering, we think the market might take some breather for the time being.
And finally, Mr. Yu, if we could talk about yesterday's big news that Samsung Group's de facto leader, Lee Jae-yong, who's in prison, has been granted parole, and that should make it easier for him to take part in decision-making for the company. Interestingly, that decision did not result in a surge for Samsung stock today. Why do you think that is, and what do you make of the situation overall?
Right. If you look at the current situation about Samsung is that there's always been the corporate governance issue relating to this group, and obviously that applies to all the group within the country. But Samsung has been making some headways to improve the corporate governance side, where they have increased the payout ratios and the structural issues. And right now, as you know, the heavy competition is happening on the handset area as well as the DRAM area, the semiconductor businesses, and that Korea needs to do ample investment to continue to be the top market share players within the memory business side. So Jae-yong Lee coming back is positive news. However, though, because he was convicted before having participating into the management process, he needs approval. So we need that some time period. And we need to see continuation of improvement in the corporate governance side from the Samsung Group. I think that that's something that needs to be done over the longer term period, rather than immediately thinking that this would have a positive implication for the share prices. We'll watch and see how it plays out. But we think that the competitiveness of Samsung Electronics and Samsung Group is world scale, that within the handset business as well as the semiconductor businesses, we think that they will continue to have a very strong market share within this area. So overall, I think there's a lot of the political issues, the corporate governance issues, but I think the track is in the right track where improvement is happening for the Korean corporations.
Got it. All right, we'll have to leave it there for today, Mr. Yu. I always appreciate your insights. Thanks for coming on today.
Thank you very much.